Hey, what's going on, guys? This is TerrenceRe. Got another stock market update for you. Today, we're going to talk about a short that I got on in AMD that I put on today. And without further ado, let's start with a quick market rundown. Right now, the market is basically relatively flat. We got the VIX. It's green. VIX futures are green, but it's basically, up like the VIX futures up 4 ticks. We got the S&P futures are down 7 handles. NASDAQ futures down about 20, 22 handles. And the Dow is down about a 1/4%. Russell is relatively flat, down about a whole handle. Bonds they're green, but they're flat. So basically, we got a flat market today. And as we're going into the holiday tomorrow, the stock market will be closed. And so it's almost like they've already stopped trading for the week, which in my opinion is pretty good. We got a jobs report that is still going to report tomorrow. So what that tells me is like traders probably are positioned already and they're going to wait until after the jobs report to put any more risk on. We'll probably get a big move come Monday, either way, depending on the jobs number. And what I really wanted to talk about today um, is this trade that I put on an AMD. So what you're looking at is the Tasty Trade platform. So on Tasty Trade, every day every day that the market's open, obviously at 10 o'clock, they have something called the Tasty Hourly Top Equities. And so this shows this is about 20, look like about 20 stocks. The top 20 stocks, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. So 25, top 25 stocks going through the platform. And they update this on an hourly basis. So it starts at 10, I believe, 10 Eastern time. And they'll update it every hour throughout the day that the market's open. And so right now, Tesla is generally number one most of the time, Tesla and Apple. And then you got Tesla today, as of right now, you got Tesla, Nvidia, Meta, Apple, Amazon, Costco, which I didn't take a look at Costco. Might be worth me taking a look at. Got a big down move. Costco is down almost 3%. Um, so maybe I'll take a look at that. AMD. And so I'll come here and then I'll go through the top 5 or 10 or the names that I normally trade. And so I looked at Nvidia and then I came to AMD. Now Nvidia and AMD, they pretty much will trade similarly because they both do chips and they're in the chip market. I'm surprised I don't see Micron on here, but and I was looking at, if we look at the Nvidia, I seen this high and then I got this high, right? And then if we I'm gonna put my indicators on and show you my MACD. And you can see the MACD crossed over right here on the video. Actually, it crossed over yesterday. And it's holding right here on this moving average, right? And you got slight divergence. So from here to here, you got divergence. So let me just draw this trend line and I'll show you how I arrived at the trade at AMD. I got some divergence. And then divergence is anytime you see on a momentum oscillator that the momentum oscillator is opposite of price action. So basically we got price action continuing to go up, but on the momentum oscillator, it is decreasing, going down. So that let me know that momentum is subsiding or beginning to turn. So something will slow down first before it turns. Just think about it. You driving a car. You don't just take the car and just turn the wheel. If you do, you might flip the car or something like that, right? You generally will hit the brake and slow down, right? Or let your foot off of the accelerator, either or, and begin to slow down. And then when you slow down, then you turn the car. Same thing in the market with with trading momentum. Momentum will slow down first. As you see the price action still going up, you can see momentum has slowed down. So it's letting me know I could get a possible turn in the market, or it may just get some sideways action. So I was looking in the video, and then I said I seen AMD, so I said, well, let me come check out AMD. So then I clicked on AMD, and AMD doesn't it actually didn't have the momentum shift because it still made a higher high on the momentum, but it turned, and it turned, gave me a high, a low, a lower high, and then a lower low, right at a Fibonacci level that this level was established like been in play almost for a year. And I'm gonna come out and I'm gonna show you. We'll go to a 2-year chart and look at this level right here going across. You got to turn here, and now we're right here again. So I just said that. I said, well, let's look at trying to set up a bearish to neutral kind of trade. Let's go back to the 6-month. Now, all I did was throw my Fibonacci retracement on from this high to this low, and it's right back in my little sweet spot, a 618. You see, I got like a doji right there, and the market turned. So basically, then at that point, I'm just looking at, I put my fib expansions on. So now I'm trying to find levels. It's kind of holding right here at 100%. Now, it could take this hit right here and go up the other way, and I could be totally wrong. That's cool. But this is, part of my thought process into making this trade. So I'm coming down here and I'm looking like that my next support level gonna be right around what 86 to 84. So I'm trying to peg it right around 85. Now, let's go to the trade tab and let's take a look at some possible ways of playing that if you have that short bias of, getting to around that area. First of all, you got to find a good if you're trading options, you want to find a good place to trade as far as like your expiration cycle. I don't want to do 15 days. I think if I come to 15 days, the expected move for 15 days is right at $86, right? So I said, and I want to give myself time. I could be wrong. And sometimes you want to give yourself time. You could be wrong initially, and then the market just over time will, get to where you at. So let's go to the next monthly. And I generally don't like to be trading under 21 days. I don't really, if I'm going to scalp, meaning I'm going to trade like within that day, I'm probably going to use like the 0 day or the 8 day. And I'm looking to get in and out that day. The market's not moving fast enough for me to do something like that. So my next decision would be, let's look at 45 days. I came to 43 days out in the May cycle. And when I came to the May cycle, you're looking at you got 90, 85, and 80. I don't have the strikes. So I said, well, it's obviously more liquidity in there. But I said, well, let's go a weekend. Let's go 36 days. Now, keep in mind, I'm going to play this trade through earnings because it's saying AMD has earnings on May 2nd. You can see what that E right there in that purple line. Let's go to 36 days. Now, you can see 36 days. The risk is still in here. If we come over here, the expected move is $11. So that's letting me know the expected move is saying that, hey, it could run through this area, right? Because you got it all the way down to 81 on the bottom side and 103 on the top, right? So now you could play it. I said 85 is, 86 and 84 was my range. I could have bought a put and paid what 289 to 293, so roughly what 290, 291. Now when you buy a put though, you're paying for time. So theta is against you. So I generally like to do like some form of either I buy a put spread. You want to either buy something here, sell it here. You could have did that for $1, risk a buck, risk a buck, make a buck, or You could have tried to target it, hit by the 87, sell the 85, right? So you're risking one to make two almost with that. Or now with that though, which that wasn't a bad trade. I actually thought about doing that. But I like to do butterflies and broken wing butterflies just because they do have I'll show you on the analyze tab. So if you do it like here, let's see. Now obviously you got to sell two. Now if I do a regular butterfly like this, like so, now I'm gonna put two right there. So all I did was let's take this off. All I did was come right here and click here. So you see where it says sell one, buy one, sell one. We want to sell two here. So I highlighted it, and then I'm gonna go to quantity and hit over, and now I got two. So that's a regular equidistant butterfly. Now the only thing about this is you see where my profit area is. It's right here. So I need the market to stay within this range in the next 36 days to really make some money. It's cheaper. It's only 58 bucks, right? But you can see my probability of profit is like 22%. And so what I did was I broke the wing. I just moved this in. Now when I do that, now look at my green zone, my profit area. So long it could run through this area and then just keep going and I still make money. And if you look at it, now I paid 104. You can see my max profit is 396. Max loss is what I paid for it, which is 104. This is so with something like that, I like that. Risking one to make four. Now, and time is on my side. And I probably, excuse me, I won't hold this all 36 days. Now, if we come look at analyze this trade, let's go to the analyze tab. Now you can see what now I'm gonna put the market's not moving today. I doubt very seriously that the market gets down to 85 today. So we'll put 85 over here. Theoretical spot price. Click this check here. And as far as I know, this is the only you can only do this on Tasty Trade. I don't know any other there are other platforms that have analysis tabs, but theirs isn't as easy as the one on Tasty Trade. So you see I come right here to 85. And if I make it there by what? Monday, I make roughly 50 bucks. If it blows through my target and continues to go, look, the further it goes down, the more money I make. So if I'm right, but it just blows through my target. Now, if I had that regular butterfly on, I wouldn't make money. And it blew through my strikes and kept going, I wouldn't make this profit. So that's why I break the wing. And as long as it stays down and the more time, so let's go all the way to next Friday. And you come right here. Now, if it goes there by next Friday, look how much it make. It says 52 instead of 49, but look if it blows through. It just continues to go. You make more money. So I just need to be right directionally for the most part, and I'll make money. And I won't lose on theta decay, on time decay, because of the two puts that I sold. And that's why I like to do butterflies instead of just buying. Now you could buy this put and make the trade that will make the most money is buying the put outright. Like just coming right to the table instead of doing all of this, just saying, hey, I think it's gonna go to 85, buy this put. Right. This would make the most money. But it's the least the least probable of all the trades that I went through. And obviously you can also come on the call side and sell a call. If that's what you want to do, you could sell let's go back here and let's say this high right here. Let's say you want to sell outside of this high, you could sell this 99. Sell the 99 right here, 35 delta. Take in $310 in premium, or 315. And this is the high. Now selling the calls is the highest of all the probabilities, right? And you can come in here, and if you want to cap your upside, you want to cap the loss, you could then put a wing on it, and now you got a call spread, and your max loss is 369, max profit 131. But if you don't want to do that, take that off, and it's gonna hold you $1,120 in buying power, which that's not a bad trade, because you're taking in $310 in premium, and you're being margin. So you're taking in about roughly 25%, almost about 30% of what you're being margin in premium. So it's a lot of juice in this trade. If you want to be a little safer, just come out and sell the expected move. Sell to 103, take in $2. I'll probably put it right there. Say take in $2. The margin you 918, so you're being margin less. 80% probability of profit. You got a 93% chance of making a whole buck on this trade, of getting 50%. So I just went over, different ways to play getting short, and you could just outright short the stock, which I don't like to do. I don't like that play at all. I rather play it with options. So hey guys, you got something out of this video, hit the like button, hit the subscribe button, and as usual, if you watching this, these are trades that I do. I'm not advising anyone to take this trade. You take it at your own risk. But I like to go over different ways. And this is like, when you understand options, these are different things that you can do instead of just buying and holding or shorting outright. There's different ways you can play the market. And very, very cost effective, very capital effective. Like this trade that I put on, like I said, only paid $104 for it. So you could literally, on Tasty Trade, you can open up an account with $1,000 and put this trade on. So you don't have to, these trades that I do for the most part on this account, these are all tailored for small accounts. And you could say, well, I have a large account. If you got a large account, just sell the call outright. That's something probably, or you can just do 5 contracts of this same trade for 104, or 10 contracts. It's a lot of different ways you could play it by the put outright. So with that being said, guys, I'm not going to hold you too long. Be comfortable with your risk. Like, I'm comfortable with 100% loss on this trade, and I'll be fine. And I think that's the measure that you should use. Like, if you lose this whole trade, you be all right. If you can say, yeah, then you can afford to sit through drawdown and stuff like that. And with that, I'm going to be out, guys. Peace.